Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is September 8th, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market is still in correction. Leading stocks remain strong. Gold and silver are still in a pullback mode. My plan, I'm continue holding on to the leading stocks. I have reduced the gold and silver ETF holdings. Let's take a look at the major index and their charts. First is the German DAX index. DAX has stood above the 50-day moving average. This is positive. China Shanghai Exchange Index. This index has reversed to the, seems like it's bottomed out. And right now is making higher high and higher lows. It's above 50-day moving average. Nasdaq Composite Index has rebounded from 50-day moving average. This is the strongest. Mid cap is in the downtrend. Mid cap index is below 50-day moving average. It's going down. Small cap index is also below 50-day moving average. It's right there. So we have to watch it where it's going to go next. SP 500 index is also below 50-day moving average. Gold monthly chart. Gold is rebounding. Gold daily chart. Gold is making higher highs and higher lows. Looks like it's hold the support. Silver pulled back. However, it holds the support. It's still in the uptrend near term, but last week it has pulled back a little bit. Gold mining stock ETF and GDX is pulling back. US dollar index is rebound. Crude oil is in a very nice uptrend here. It broke out the flat base is going up. IYR is in a downtrend. This is a real estate index, US real estate. MBB is a US real estate mortgage bond. Is in a downtrend. Mortgage interest rate is going up. SMH is a semiconductor index ETF. It's going above the 50-day moving average. That's a very positive sign for the market. Semiconductor index and the financial index, those are two sectors leading the market on the downside or upside. Right now, semiconductor has stood above 50-day moving average, rebound. That is a very good sign for the market. So we don't know what the market is going to do for sure. However, it won't be surprised if the market, the next step is going up, and if it go above 50-day moving average, that would be very positive. USO is a crude oil ETF. This is going up. This is the same pattern as the crude oil. XLE is an energy selector ETF. It's rebounding. XLF is a financial ETF. Right now, it's in a downtrend. We have to watch it carefully, see if it can go above 50-day moving average. If it does, that would be a very positive sign for the market. Let's take a look at the three watch list. The first list is the best leading stocks, and those are the strongest stock in their fundamental, and they show the big institution accumulation. Second list, the second tier leading stocks. They have strong fundamental, and they have good chart pattern. Third list are the leading stocks near the buy point, and they recently broke out, but they're still within 5% of breakout pivotal point. So those are the third list is the most interesting list. Strongest stock, Facebook, is very strong. It broke the base here after the release earning. It gap up with a huge volume, and they never look back. It just keep on going up. Right now it's on the new high. See, this is a very strong stock. LinkedIn is also very strong, uptrend. Tesla is in the uptrend. Those are the three stocks that are very strong in the current market. Other strong stocks, ACT uptrend, AFOP uptrend, Surging uptrend, it holds 50-day moving average, rebound from it. That's very positive. Salesforce broke above a flat base. This is a very long-term flat base. It broke out, and with a high volume, with a gap up, this is a very powerful breakout. Usually the stock will just keep on going up after that. C-trip uptrend. You see the C-trip had all these gap up breakout, the gap up and keep going up, and then another gap up and go up again. So the gap up is actually a very powerful way for the stock to break out from a base. DDD 3D printing, a breakout from the base right here. It's in uptrend now. FLT uptrend. Green Mountain Coffee, this is uptrend. Michael Kors uptrend is making a new high. Netflix also uptrend. New Skin uptrend. Proto Labs uptrend. Qco uptrend. Qihu uptrend is making new high. This is a Chinese company. Starbucks uptrend. Sprouts Farmers Market, and this is the IPO. It's on my watch list. It has no buy point. Sofang is also a Chinese company. They provide the online real estate information database, and this is a very strong stock. Splunk, very strong stock, and it break out with a gap up here. Very strong breakout with a huge volume. Yandex uptrend. YY is a Chinese search engine. It's a, well, actually social network. YY is a Chinese social network stock. It's a very strong uptrend. Let's take a look at the stocks near buy point. Las Vegas Sand is breaking out from the cap with handle. This is a handle, and with a high volume. Recently break out. OAS is a, this is a very strong pattern on that day. It was on the down day, but it reversed. It closed up with a huge volume. That means the buyer came in. Originally, when the market opened, the stock came down, and then buyer came in and lifted up. OAS had a very good news, and they bought the oil field, so that's a good news and lift up the stock. Usually, it can go up for a while. RH broke out above the cup with a handle. There's a handle. Break out the cup with a handle base. It's very strong. What to do during market correction? And usually during market correction, it is advised not to buy new stocks, and you should wait until general market turn uptrend before aggressively buy new stocks. However, if you already bought leading stocks such as Facebook, Tesla, LinkedIn, you can hold on to them as long as they continue hold up in price. If the stock break down with high volume, one must get out. As for gold and silver, right now it's in a critical point. If it break down support, you should get out. If it rebound and continue go up, you should hold on. That's all for this week. See you next week.